In this video, I'm going to demonstrate plant-wide versus departmental allocation of overhead using exercise 934 as an example. We're an ice cream company. We produce 3 different flavors, strawberry, vanilla, and chocolate. Strawberry and vanilla are produced in Department SV, which when managing that department, and chocolate is produced in Department, you guessed it, Department C with Charlene managing it. Currently, the company uses one plant-wide predetermined overhead rate, so one overhead rate for the whole entire company, irrespective of department, and it's based on direct labor hours, and they've kindly already calculated that for us at $3 per direct labor hour. Our goal is to create product cost per 1,000 gallons. So for example, for strawberry, and the good news is they've already calculated the direct labor and raw material cost for us that's given. Strawberries direct labor cost for 1,000 gallons is 750, whereas raw material is 800. We do need to work at applying overhead. And again, that's going to be based on the $3 per labor hour plant-wide predetermined overhead rate multiplied times the number of labor hours to produce 1,000 gallons, which is given to us in Part A as 50. So 50 times 3, $150 of overhead is going to be applied to strawberry. In addition to the raw material of 800, direct labor of 750, our estimated product cost allocated to strawberry is going to be 1,700. Before I start to look at some of the other flavors, I want to jump to Part B. And Charlene is starting to question the validity of using one plant-wide predetermined overhead rate. And the reason is she believes that her department and SV department that produces strawberry and vanilla are very different. She has very outdated equipment and it's a very manual process, whereas Department SV is much more automated, newer equipment, and not so based on direct labor. So her assumption is she feels like based upon that, unfortunately, with the driver being direct labor, she's likely getting allocated more overhead than she believes is correct. So we're going to take a look at this and say, what if we use departmental overhead rates or separate overhead rates for the different departments? And because Department SV is more automated, we don't believe direct labor would be the driver or the activity driver. We believe machine hours would be. But since Department C is much more outdated equipment, much more manual, we're going to leave that with direct labor hours. In Part B, they asked us to calculate the separate departmental rates for the individual departments. So we're going to start with Department SV. When we separated out the overhead cost, Department SV was 105,840. And again, we're going to base this upon machine hours. Our machine hours for Department SV, we're not going to add in Department C because we're only looking at Department SV, is going to be 25,200. One thing I don't like about this problem is that's also the number of the labor hours, but keep in mind we are looking at machine hours. So 105,840 divided by 25,200. Our estimated overhead rate for Department SV is $4.20 per machine hour. We're going to look at Department C, which has overhead costs much lower. So we're beginning to feel like Charlene may have been onto this. And if it's much older equipment, that overhead cost overall is likely not going to be as great. 23,760. Again, we're going to keep with our labor hours. And for Department C, we have 18,000 of direct labor hours. 23,760 divided by 18,000 is $1.32 per labor hour. And Charlene might have been on the right track. So we'll skip to Part C where we're asked to recalculate the product cost based upon these different departmental rates. And we're going to again look at strawberry. So direct labor and raw materials stay the same, but obviously the overhead allocation is going to be different. Now, because we're in Department SV, we're going to use that $4.20 per machine hour and multiply it times the number of machine hours. I do want to know, there's a coincidence here. The number of labor hours, if we went back to Part A, was 50, and the number of machine hours that they tell us in Part C is also 50. That is a coincidence. Make sure we're using the machine hours, though. Again, 50 machine hours times 420 is $210 of overhead added to the raw material of 800 and the direct labor of 750. Now we've increased the cost. Originally, when we used the plant-wide predetermined overhead rate, it was 1,700, but we've increased that only because of the overhead. And again, we think Charlene was on the right track. We've increased it to 1,760. I'm not going to do all the flavors, but just for a comparison with the other department, let's take a look at chocolate. For example, we go back to chocolate, the direct labor was 1,125 and raw materials was given to us as 600. Again, going back to part A with a plant-wide predetermined overhead rate, they tell us that 75 direct labor hours were used for chocolate times the plant-wide predetermined overhead rate of $3 per hour gives us overhead applied to chocolate in part A of 225. Added to the raw material 600, direct labor 1,125. That means our product cost using a plant-wide predetermined overhead rate for chocolate was 1,950. Skipping back to part C with the departmental allocation, direct labor raw materials stay the same, but our allocation of overhead is going to change. Recall, chocolate is produced in department C, and now our overhead rate is $1.32 per labor hour. One common mistake I see students do is they'll say $1.32, and I look at part C and I see a new number here of 150, so I must need to multiply that times 150. Keep in mind, part C, it's giving us machine hours because we need to know machine hours for any flavor that's produced in the department that's driven by machine hours. But that's strawberry and vanilla department as feed, that's not chocolate. So we need to go back to part A and pull the number of labor hours that they indicate for chocolate, and that's still going to be 75. So 75 times $1.32 is $99 of overhead applied based upon departmental rate plus the raw material 600 and the direct labor 1,125. And now, and Charlene was on the right track. Now, chocolate, the cost has dropped from 1,950 to 1,824. I'm going to let you do vanilla on your own.